Hello and welcome to the Ditto educational series that will provide you with the skills you need to become a Forex trader. Fundamental and technical analysis, as we already know, are the two pillars of market analysis. They are the yin and yang, so to speak, in the balance that is analysis. We know that traders use them separately and have found that people tend to lean heavily in one direction or the other. However, they can both be used in conjunction with each other to provide a well-rounded trading strategy. We often compare the differences between fundamental and technical analysis, but by merging these two we can only stand to benefit. There is no hard evidence as to which style of analysis is superior, and combining the two may lead to more definitive trade choices. Fundamental data can offer us the directional bias for trading the broader market direction. When this data shows strong bullish potential, we can avoid shorting opportunities in order to play the probability game and use our technical analysis to pinpoint entries on retracement or identify other factors that will help or hinder our trades. There are many ways in which we can strategize or apply fundamental and technical analysis, but today we will look at three tried and tested methods which have practical application within the Forex market. Method 1. Method 1 involves combining breakout trading with fundamental analysis. The breakout trade strategy basically involves capitalizing on a price moving outside its predefined trading range. The catalyst for this is usually instigated by news events initiating market volatility. As we already know, we should always err on the side of caution when trading surrounding times of news, as it could push price beyond our support and resistance levels, which usually our stop losses are set just beyond. So, how can we look to take advantage of these overreactions to news releases? We are basically looking to wait until a news release pushes price beyond a support and or resistance level. Once a test of either level is reached, we could look to buy or sell accordingly. In other words, we want the overreaction to the news to allow us to gain an advantageous position before the market is repelled by our prominent support or resistance level. We can look to trade breakouts with any of the pre-prescribed mechanisms of support and resistance. The hope is that high-impact news release could bring in the necessary volatility to either trigger our positions into the next trade or move an existing trade closer to our take-profit target. Additionally, if we have captured the majority of a move and our trade is doing well, we could set a tight stop loss in anticipation of the news to capture a potential breakout beyond where we would ordinarily expect the market to turn around. Method number 2. Method 2 involves combining range-bound trading with fundamental analysis. Range-bound trading involves identifying a price channel of any given market. A trader uses the support and resistance lines to buy at the lower trend line support and sell at the higher trend line resistance. This example shows a chart with a strong upwards bullish trend. When trading a strong uptrending market, we are looking to enter our trades at the lowest possible level to maximize profits within this strategy. As it is in an uptrend, we do not generally sell at the top as it defies the trend and invites bad trading decisions. Drawing our trend lines helps identify future potential price levels in which we may seek to enter the market. Now, fundamentally speaking, news events can interfere with our range-bound trading. Ideally, we would like to avoid having open trades surrounding the times of high-impact news release, as they can force the price beyond the range. Using this range-bound technical analysis in conjunction with fundamental high-impact news release avoidance can serve to help you being unnecessarily surprised, as well as avoid losses due to being stopped out. Method number 3. Using oscillators with fundamental analysis. Oscillators are widely used in technical analysis, and they are sometimes used to evaluate short-term overbought-oversold conditions. Here in this chart we can see an example of the technical analysis tool, the RSI indicator. In this method we are using it in conjunction with the non-farm payroll news release, which would be our fundamental indicator. One of the most significant fundamental indicators is the NFP figure, and in this example it was lower than the estimated expectation. This in turn caused the US dollar to weaken significantly, as shown by this strong bullish price move on the Euro-USD pair. So the two factors to consider here are that firstly, the RSI indicator signifies that the market is oversold, but additionally, it is so along a prominent support line. Secondarily, the news surrounding the non-farm payroll resulted negatively for the US dollar. All of these conditions provided the perfect circumstances for a bull run, and reading the market using both technical and fundamental indicators would have allowed you to foresee and seize this opportunity as it arose. These three strategies are not simply conjecture, but tried and tested strategies. You can apply them to real-life market conditions as and when they occur safely using a demo account, or you can look back over historical data in the markets and apply them to see if you are seeing the bigger picture and anticipating the markets correctly. Don't forget that during times of high-impact news releases, markets can be extremely volatile and unpredictable at times. It will be ultimately down to you whether you look to engage or avoid volatile markets. However, you cannot avoid being caught out by high-impact news if you are totally unaware or uninterested in the fundamental events. Now take some time to think about these strategies and how they apply to the Forex markets and how you may apply them in future. Please sit back and contemplate what you have learned today, and remember, contemplation is the key to learning. Thank you for watching the video. If you enjoyed our educational sessions, then please like and subscribe.